How are we doing? How are we doing? So, nice to see you all again. obviously, what we're going to cover today is a bit on kind of what's happening this week. Regards to, we'll talk a little bit on the Fed as well, and we'll talk a bit on the NFP prints. But how is everyone? Obviously, this week is a little bit on the choppy side, to be fair to you, in terms of price action. I mean, obviously, you may have seen the dollar kind of chop and chop. We've seen a bit of pullbacks now, a bit of wiki price action. The pound as well. We've seen a bit of strength today post-budget, which is quite interesting. But again, we'll talk about that. That's more of like buying the rumor, selling the fact environment. Let me have a little look as to what else we've had going on. AU as well has pulled back a little bit. Euro New Zealand, we did see the RBNZ this morning. They were a little bit on the hawkish side, which generally means that they want to keep rates restrictive, or they still want to keep the environment restricted. And as a result, we saw a bit of stronger New Zealand dollar, but we'll speak about that a little bit later on. So let's get right into it. Firstly, what I'm going to do is just look at the calendar. We'll have a little talk about fundamentals this week. I'll do my best to explain to you what that all means in terms of price action, in my opinion. And then we'll sort of look at some docs and kind of what other people are saying as well, because it's always important to have a little look as to what other people expect as well. But it's always the number one thing is to have your own bias first. For example, if we are looking for, let's say, a long euro dollar, but somebody else is saying short, you should only go with your bias. You don't change it because somebody else has changed it. You use that as a way to I used to use it as a way to see, am I talking about the right things? And if I'm wrong, why was I wrong? Was there something I forgot to look at? Did I downplay something a little bit more? And that gave me a good guidance for future references that what is important will move markets and what's not important won't move markets. And I'll try to create a strategy around that. But let's have a little look at the calendar firstly, and I will share my screen in just a moment. So over here, let's have a little look. So let's have a look at the calendar. Obviously, remember tomorrow is Thanksgiving for the US. So happy Thanksgiving for tomorrow for those who are doing it. But do expect price action to be relatively quiet, especially like New York session. I know a lot of people like to trade New York. Expect price action to be pretty much dead. So let's have a little look. Monday, so what did we have? We had Japanese bank holiday and then German IFO. So German IFO is basically like a forward-looking indicator. Now there are two types of indicators. There are forward-looking and backward-looking indicators. So German IFO can give us a guidance of what could happen in the future. Obviously not necessarily what will, because if we knew for certain, trading will be super simple. But it does give us a fairly okay idea, and it's still painting a relatively bleak picture. I believe it stayed around that figure for a while now. Yeah. It stayed around that sort of 88-ish to 89-ish range for quite a while now. And it seems as if people are a little bit concerned about the fiscal environment in Europe, or in Germany, sorry. So yeah, it's understandable a bit as to why German IFO is a little bit stagnant. Fiscal, by the way, just means government, what the government is doing, like what we had today with the UK. We had the autumn budget, which is fiscal. So whenever you see someone talk about fiscal, just think government. So if I do my little text box, as I'm sure you know I like to do, if you see people say fiscal, just means government. When you see people say monetary, it just means central bank. So those are the two types of things there. So yeah, fiscal environment in the UK we'll look at price action for the UK in just a moment. I was going to try and explain it now, but we might as well explain it a little bit later. Tuesday, so yesterday, what did we have? We had PPI from the US. In addition to that, what we also saw, if I quickly share my screen and we'll have a little look, we did as well see, find the calendar, yesterday, wasn't it? Yesterday. Before PPI, we saw something called the ADP Employment Change Weekly. Now, this is basically private payrolls. And remember, what you have to think about in regards to the dollar right now is it's mostly being driven by Fed expectations of December. So if people see any data that will give us a guidance on December, is going to move markets. And what we saw was NFP last week, and we'll touch up on that in just a moment. However, we saw more, we saw some delays in the data until after the Fed meeting. So it's a bit unfortunate for them because they were hoping to see all of those other bits, the October and the November prints, and then they have their Fed meeting, but that got delayed. So basically what we're thinking about now is any data from now until the Fed decision, is it telling us that they need to cut, or is it telling us that they need to hold? Those are the things we think about when we look at the dollar. Remember, fundamentals drives price, right? Price action that you see on the charts is past data. It doesn't give you a guidance of what could happen in the future. That's why you look at fundamentals, right? It tells you roughly what should happen and you position accordingly, right? So think about it from a stock market perspective. If you were, 10 years ago looking at Nvidia and you knew that fundamentally as of right now, Nvidia is very strong, but you went back into the future, you'd definitely buy Nvidia, right? Because you know the fundamentals in the future are going to be very, very strong. A lot of AI, uses a lot of GPUs, just in overall in general, people are demanding a lot more GPUs and of course CPUs being AMD. But if you knew that back then, that was roughly going to happen in the future, which some people did position accordingly to that, you'd be pretty wealthy right now, right? So all we're doing is similarly for fundamentals in FX is we're thinking about roughly what should be the future based on what we know now, and we position accordingly. That's all you're doing really, and price action will follow the overall fundamental direction. So yeah, what was it? ADP, wasn't it? Yeah, preliminary, like private ADP payrolls did come out, not great. And then PPI as well, it wasn't exactly the best of figures. Conference board consumer confidence, it's kind of a main driver maybe, but I wouldn't say it's too much. Again, people are mostly focused on labor market data. Anything that gives us labor market, right? That's all markets are focused on. CPI inflation, people understand that already because we've seen a lot of CPI data already. We've seen PCE, so it's nothing new to markets. Remember what we spoke about last week, markets always think about new things. They trade new things. If nothing new is said, they leave it alone. They try and find something else. So consumer confidence is not really going to do too much. PPI, we've already seen multiple PPI prints, so it's unlikely we're going to see much movement there. Wednesdays, so today, what did we see? We saw CPI from Australia coming in at 3.8%. Does anybody know what you would be thinking about all of this? So if you see CPI in an economy come out pretty good, i.e. what we saw from Australia this morning, 12:30, what does that mean? What do you think that means for the central bank? That's the question you're asking. Does that mean, in your opinion, let me ask the chat, do you think this means 3.8%? Just looking at the headline, we're not looking at the underlying reasonings as of yet, but just based on the headline data, do you feel that the RBA should hold rates or cut rates? And that tells you where the Australian dollar will go in the future. And that's what we're doing with fundamentals, right? We look at data, we look at what the Fed says, what they're yapping about, we look at what the BOE, what they're talking about, and then that tells us trade ideas and we position accordingly. So what do you think this means? Do you think this means hawkishness or dovishness? And that tells you how the AED should be in the future. What do you reckon? I would say personally that it would mean slightly more hawkish behavior. And the AED should do okay in that environment, although right now it's kind of chopping with the dollar, right? We're seeing a lot of choppy AED price action. But you can see as of this morning, which was this candle's here, you can see a lot of AED strength, right? AED strength, AED strength, AED strength, AED strength. Obviously, a little bit of more strength as of the last couple of hours, but overall, since this morning, pretty good price action. And that's not because of market manipulation. It's about what the data told us in the morning, early hours in the morning. Obviously, London woke up, then they started trading it further. Then the RBNZ. Now, they cut rates. Does anybody know why the New Zealand dollar strengthened? Remember, this is not about market manipulation. It's about something else. And why do you think, in your opinion, that the New Zealand dollar this morning done pretty well, even though they cut rates, which should technically be bad for the currency, right? But we actually saw positive currency. Why do you think that happened? And it's actually kind of similar to what we saw this afternoon, right? With the UK, where they had the autumn budget. A lot of people were selling the pound for the past few weeks, which is completely understandable. You don't want to be buying a currency that is expected to be having bad fundamentals in the future. But then we saw the autumn budget. Reeves absolutely yapped. Then the pound strengthened. And it's actually kind of similar in that regard in terms of expectations. So what we saw with the RBNZ is they basically started to close the door on rate cuts. And a very good way of sort of thinking about it is, remember, you're trading FX, right? A lot of us here trade FX. So all you're thinking about is the flow of money. We spoke about this many times over the last few weeks. You're just thinking about the flow of money. And if you feel that the RBNZ, which is the New Zealand Central Bank, the Royal Bank of New Zealand, are not expected to cut rates in the future, then interest in the US, or New Zealand, sorry, is higher than anticipated. What that basically means, well, I'll just put ants just so I can keep it on this graph here. What that basically means is the flow of cash won't move as much, if that makes sense. So basically, here's how it's explained. Let's say in the US right now, the interest rates are, we can have a little look at this website. It's called Trade and Economics. I'm sure you've seen this before. It's free and it's a very good website. It has all of the data that you need. Now, interest rates in the US is 4% at the moment. And you can see that they cut rates from 5.5% all the way down, all the way down, all the way down. And as these rates come lower, investors begin to see that investing in the US does no longer yield as much as it used to do. What does that do? Well, basically, what it suggests is the environment in the US is deteriorating. So from a confidence perspective, it's not great. But also from an investor perspective, investors want to get as much yield as possible. So what they're going to do, they're going to look elsewhere that has a lot higher interest rates, not necessarily higher in terms of compared against the US, but we're thinking about the future of rates after said where they're at now. Because we know in the US, they're probably going to cut a couple more times, and therefore the dollar comes in weaker. Whereas the RBNZ, they've already cut aggressively. And if we look at the New Zealand dollar against the US dollar, you can see, if we go on the daily time frame, since 2024, we had this huge downtrend, New Zealand dollar weakness. We then had this more dollar strength driven, and then further weakness in NZD. And you can see what the reason why that was because the New Zealand Central Bank was cutting and cutting and cutting. The growth was worse and worse and worse. And remember, as a trader, you're just following the flow of money. So if you're seeing that deterioration is occurring in New Zealand, you pull your money out and go elsewhere. And that creates weakness in the currency. So that's why today we saw that they're kind of insinuating that they're not going to cut anymore. And then we saw a strong New Zealand dollar. That's the best way that I can explain it without going into too much detail. That's extreme basics of economics, or how economics drives FX price action. Can you explain what happened on the UK budget? Yes, I can do. And we'll have a little look at that a bit later on. I'll show you some articles and explanations around that anyway. Obviously, then we had the budget. Now, if you remember price action on the pound, remember, markets like to trade forward thought process, right? And that's why across the board, you saw pound coming in lower. If you look at GJ is a little bit different because it's more so yen driven. GCAD, we actually saw a bit of weakness in November heading into the autumn budget. Although actually, to be fair, that is kind of choppy price action, not exactly the best example. GA, I believe, was a good one as well. We saw a lot of weakness heading into November, which is today's price action. Bit of pullback. Now, why did price action do all of this? That's the question you're asking yourself. Why did price action sell off heading into the meeting? Why did price action do all of this? These are the questions you're asking yourself. And remember, what do you think they did? They traded the forward thought process of the future of the UK based on the budget. So price action sold off constantly, basically, for the past month and a bit. That's cool. We understand that as the reasons why that happened. Then we got to the budget today, and we'll speak about kind of the reasonings, kind of what happened. But I'll just quickly chuck up a Bloomberg article in the meantime, and we'll look at this a little bit later on. But price action traded into the event because of this. What do you think would happen then if they did exactly what markets expected? What you tend to see is buy the rumor, sell the fact, right? Basically, they buy into the rumor that the UK is going to be quite absolutely destroyed fiscally. Not good for the pound, obviously. So they sold the pound off. Now that she kind of came out and she kind of threw a little bit of curveballs around, we'll speak about it a bit later on, the pound rallied because it wasn't as bad as people were expecting. That's why we saw stronger pound on the event of the autumn budget, because it wasn't as bad as people were expecting. What people were basically doing was thinking, oh, they're going to do all this with taxes, they're going to reduce spending, they're going to borrow more debt. This is all bad, obviously. We sell the pound into that. Cool. It got sold, it got sold, it got sold. And then they thought, actually, it's not as bad as we kind of were expecting. We were expecting doom and gloom. It's obviously still bad in regards to what it means for the economy. But in the eyes of the market and what they were trading in the interim up to the event was not as bad. And that's basically what happened on the event. But we'll speak about that a bit later on and what that means for the pound going forward. Now, this afternoon, we saw unemployment claims, 216K. Now, unemployment claims is obviously a weekly set of data. And what it doesn't really do, it's kind of a bit on the volatile side, because it can be massively impacted by like weather, for example. So markets do look at it, but that's basically within norm range anyway, right? 250 to 210, 220 is basically the roughly a normal range. So even if it, let's say traded up to 240, people are not really going to bat an eyelid because it's still within normal ranges. So only when you start to see increases above 250, it's when it becomes a bit of a problem. Then the rest of today you can see, and obviously, as we spoke about yesterday, is obviously Thanksgiving. So expect pretty much dead price action. Tokyo core CPI. Now, I want to ask the chat, I feel like a streamer. I want to ask the chat about, is CPI in Japan the most important thing for the yen at the moment? I could be trying to throw a curveball. Could not be. Who knows? But do you think that inflation in Japan, as of right now, is the most important thing? And the best way to understand that is by just looking at the news. It sounds boring, I know, and don't get me wrong, I'm not exactly the smartest person. But unfortunately, it needs to be done. So, do you see a lot of people talk about CPI in Japan? Yes or no? And then that tells you whether or not inflation is going to actually be a market mover. And that's the best way of looking at it. Obviously, if you see huge spikes, it will. But in general, you know, a little bit of upticks, a little bit of downticks, it's probably not going to do too much, is it? Because it's not the main driver. And that's how you understand whether or not data is actually going to move markets or if it's not going to move markets, even if it comes in slightly stronger or slightly weaker. Like I said, if you have like a huge upside move or a huge downside, that's a little bit different. But if you see a little bit move up or a little bit move down in the data, it's really not going to do too much, to be honest. And then Friday, what do we have? Let's have a little look. German preliminary CPI. I wouldn't say this is a massive market mover for euro either. I think euro's fundamentals are still okay, and that still points to upside. I just think right now euro is mostly being driven by the dollar, and that's all you kind of think about for the time being. Up until, I believe, the 10th, if I remember correctly. Let me have a little look at this website. I believe up until the 10th is when the Fed, the 10th of December. And then I believe NFP and all the other bits of data that was delayed is going to come out on the 13th, if I correctly remember. And then we can make an assumption on the dollar after that. Then we have a very good guidance on, now we need to get super bearish to the dollar. Now we need to not be super bearish to the dollar. But I think what I'm going to do is just be a bit more nimble. But in the meantime, how do you trade the euro then? You just pair the euro against other people who are a little worse off. Like Japan, for example, like maybe the Canadian dollar. This is how you trade divergences, if you will. What's your view on gold? We'll have a little look at it. I mean, price action is still quite choppy, and I think, remember, gold thrives in an environment of uncertainty. So if markets are a little bit uncertain, which they kind of are right now, gold should do pretty well. What happens if the US and other major economies cut interest rates at the same time? So that's a good question. I'm not sure how long people have been trading here, but I traded through obviously numerous cycles, and a big cycle for a lot of people was 2022. And what happened in 2022? Everybody raised interest rates. We saw the UK, we saw Europe, we saw Australia, New Zealand, US, of course, pretty much whole of G10, barring the BOJ, which they then, again, that's when yield curve control ended, and then now they're starting to raise rates. That came like late 2023, 2024, something like around that period. But what happened then is everyone was raising rates. Now, in trading, you always try and find divergences. And if everyone's raising rates, which should technically be good for the currency, because again, remember, if rates are being risen, investors can get better yield by going into that economy and buying their debt or into companies. But everybody was doing it. So what happened? You have to find a divergence. Now, how do you find a divergence when everyone's pretty much doing the same thing? And it applies to also the environment we're in now where everyone's cutting. Well, you do X country is cutting, or let's say they're hiking in this environment, versus another. Let's say they're also hiking or raising rates. Remember, most markets, right, or what you see online, a lot of people try and use complicated wording, mostly to try and sound smart when they're just trying to say something simple. So what you have to think about trading is, if you just think and try and break down what they're trying to say something very simple. So when you see people say hiking, when you see someone say dovish, when you see someone say hawkish, they're just trying to say something very simple. Just, it's just easier because most people know in economics what that generally means. But if a country is hiking against another, and another one is, you find divergence. So what do? Basically, you do something like country's growth is, let's say, worse than the other. You could also be, another one you can do is yields. So the bond market, if you're seeing a lot of bear flattening in the bond market, that could be an environment. If you see, for example, so bear flattening is an environment where you see a lot of hiking rates. It's a fancy word to say 2-year yields are climbing faster than 10s, which is good for a currency. So if you're seeing a lot of bear flattening in, let's say, the US versus Europe, you want to be buying the USD more than you do for Europe. Therefore, euro-dollar sales make sense. So that's how you trade an environment where people are hiking at the same time or cutting. You just try and find, where is the discrepancies? Is it in growth? Is it in commentary from central banks? Is it environments where risk on versus risk off? Is it government? Obviously, that takes a little bit of work. But it allows you to have an understanding of what you're trading makes sense, and therefore mindset becomes a lot less of a problem, in my opinion. That's how I would do it. And again, I've just spoken about how it affects their currencies. Am I in any trades? I was actually. On last session, we spoke about Euro New Zealand and AU, I believe. AU I did sell on the event. We saw Fed, wasn't it? It was around, what's the date today? 26th. So 19th. I'm just trying to remember. We saw the Fed NFP come out. And then I was asking, does this mean a cut as of right now? Probably not. So I traded a bit of dollar strength on the event. Post-event, obviously, I wait for the pullback. And then I did actually get out just because I was very close to my target for phase one anyway. And then Euro New Zealand was another one, which was this push here that we saw. We saw the push here. I traded it, stops at break even, took most of my trade out at the top because again, I was close to phase one anyway. So there's no point in trying to squeeze more of a trade out. And then obviously we saw the RBNZ anyway. So it's a good thing that I took out the trade. But that's the only ones I'm looking at or was in. But I will talk about what trades we should be thinking about for the future in just a moment. I am English, yes. My question is, how do you gauge which news is the most important? Good question. So this is how I do it personally. Everyone will find their own way of understanding, but this is generally how I would do it. Ask yourself, what is the theme? Basically, don't know why Siri's trying to talk to me. What is everyone trying to yap and talk about? Basically, are they talking about rate cuts, for example? Are they talking about wars? Are they talking about weather? It could be literally anything. Then you think, what data or events like central banks, etc., will apply to said theme? So if everyone's talking about rate cuts, like right now, because that is the theme of the market, you then ask yourself what data applies to that. So you ask yourself stuff like inflation. You ask stuff like forward-looking indicators, such as PMI data. You ask yourself a language from the central bank. So are they hawkish or dovish? You then ask yourself, how is like employment doing? So like NFP, the initial jobless claims, ADP data, etc. Then you formulate an idea based on that. Ask yourself, does it suggest strength or weakness? There's the trade idea. That's basically what I would do if I was trying to find out what the theme is or what data applies to the theme is. Just ask yourselves this, and then that allows you to understand what data is important and what data isn't important. And that's why sometimes at the start, when we looked at it, Tokyo inflation should technically be good for the yen, but it's not the theme for Japan at the moment. So even though it's a very, very important set of data, obviously, because it's CPI, it's not really going to have much juice to drive the yen, because right now the theme in Japan is what the Prime Minister is doing with the central bank, i.e. the Prime Minister is doing a lot of fiscal expansion, Abenomics, which is not good for the BOJ. And obviously the Fed is kind of very tiptoeing. So therefore, that's not an environment where the yen strengthens. And that's why we saw a lot of yen weakness. Dollar yen pushes, GJ pushes. Pretty much everybody against the yen has strengthened against JPY. That's because we've not seen every week things that would point to positivity. And that's why people are still looking for higher dollar yen, still looking for higher GJ. NZD JPY is even expected to go higher. CAD JPY is expected to go higher. So that's how you understand what is important with news. That's how I would do it. Everyone's slightly different in how they do it, but that's the best way that I found for myself personally. Now, let's look at some charts and let's have a little look at what will price action do in the future. And I'm going to ask the chat, what do you feel like? Because I want it to be kind of interactive in regards to, don't be afraid to ask questions. Obviously, when I started, it was a bit different because I didn't have anybody. But it will be beneficial for you to ask questions. That's something I wish I did at the start when I was in an old company. Wasn't learning fundamentals, obviously. I didn't ask as many questions as I should have. But now that you have me here, you're more than welcome to ask questions. Now, ask yourself, what do you think is driving the dollar at the moment? Always ask yourself these questions because that tells you what data is going to be important. So to the chat, what do you feel like is going to drive the dollar in the future? And therefore that tells you what to think about. So do you feel like right now the Fed is the main driver? Do you feel like Ukraine and that sort of peace deal that's potentially happening is driving the dollar? Do you feel like it's going to be New Zealand? What do you think is going to be the main driver? Do I mostly swing? Yes, that is correct. I do mostly swing. I will hold a trade until it doesn't make sense anymore. And that's why you might see me on my Insta or something. I'll throw in a screenshot of one of the trades I'm in. I've been holding some of them for months and months and months because nothing has changed. And the reason I go to swing trading, there is a reason, and I'll tell you now. Every trader is different, right? I know traders who are very on the ball. They like to be on the charts 24/7. You have to be honest with yourself, right? And ask yourself, does lower time frame make sense if you are always wanting to be on the chart? Probably yes. If you are somebody that doesn't want to be on the charts 24/7, wants to be a little bit more of a bit more laid back in markets, do you feel like swing trading will then be probably the trade for you? Yes. Therefore, I used to be a lower time frame trader. But what happened is that I just found it unrealistic for myself as a person to be on the charts 24/7. Or obviously not 24/7, but a long, long time. Then I asked myself, what is the next best thing? So I looked into swing trading. And it made more sense. And I wasn't holding trades for a very, very long time at the start, of course. I would hold it for maybe a week, a few days. But what that was, it was training myself to become a swing trader. And then I naturally moved on to the higher time frame. And therefore it made more sense for me. Then what I did was ask myself, what things will allow me to have better probabilities of winning by myself going on to the high time frame? And then obviously that was around COVID time. And then I asked myself, okay, what are the big guys doing? What are these funds, these banks, what are they all doing? What is the common denominator between them all? They all look at data and fundamentals. So I asked myself, why am I not doing that? Number one, I was obviously quite lazy. So that was obviously one of them. And then the other one was, I always thought it wasn't important, but in reality it was. And then obviously I had to kind of force myself to get into it. And that's where I'm at today, where I'm holding for a decent amount of time. I'm a lot less stressful because I understand roughly why I'm trading something and not, willy-nilly just trading something in hope of something happening. I have a statistical edge as to why that should be the case. So that's basically why I mostly swing. So yeah, everybody, what you were saying here is correct. Interest rates, inflation, December rates on hold, mostly the weight, that is correct. The fear of the BOJ intervention, that's more of the yen perspective. And here's a little bit of a tip. A lot of us may have never traded intervention before. And intervention basically is when the monetary committee or the finance minister intervenes in FX markets. Now, that is not a good thing because most FX pairs are what's known as floating currencies. And floating currencies is currencies that are traded by normal market forces. Basically, the fundamentals of that economy. If a finance minister intervenes and strengthens the currency, obviously you see a lot of yen strength. But what happens is, and what's happened in the past, was the yen strengthened, it consolidated for a little bit, may have traded slightly higher, and then it went back to being a lot weaker in the future. Why did that happen? Because fundamentals was not in favor. So, if we see intervention in Japan, the yen will obviously strengthen a little bit, wick, big old candle. But what you'll see is more weak price action or more weak yen in the future, or dollar yen trades higher, because the fundamentals aren't in favor of yen strength. So that's generally what happens. But I wouldn't say it's too big of a driver for the dollar at the moment. But yes, a lot of us, what we're saying here, December, inflation, interest rates, cool. Now what do we ask ourselves? What is the expectation of the future? Now, right now, this website is a good website. It's a free website. And it is called CME Group /market/interest rate /CME Fed Watch Tool.html. And what this basically does is it gives you the probabilities of rate cuts for each meeting. So December, January, March, April, May, blah, 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 all the way up until October 2027. So we're not really too concerned about all of these guys. We're very much concerned about basically the next couple of months or so, just January to March. And what we ask ourselves is, for December, right now, the markets expect 82% probability of a rate cut, which is basically 15 basis points of markets priced in to the OAS curve, which is the overnight index swaps, which is a fancy word just to say another market that prices in interest rates. 82% probability. And the dollar is actually kind of reflecting that price action. We now have to ask ourselves, is data suggesting that in the future? And right now, based on what we've kind of seen since the Fed NFP print, yes, in a way. ADP initial jobs yesterday was a little bit on the weaker side, which is not a good sign. Then what we think about is now the future of speeches from the Fed is expected to be quite dovish, which basically means they're expected to now potentially be more wanting to cut further in the future. Therefore, the dollar should come in lower. However, there is one side of the argument, which I can also relate to, where the Fed hasn't got enough data since NFP. We've seen delays until after the Fed meeting. What this basically means is the Fed, if they do cut, they're more so front-loading rate cuts in that regard. Fed is been known to, recently anyway, they've been known to react to data. But one of the arguments that I also relate to is they may not actually cut, even though markets do expect it, because we haven't had enough data since the government shutdown that would suggest rate cuts. We've not had a lot of employment data. A lot of it's been delayed. So what could happen, and like I said, this is a possibility. It's just something we monitor up until the 10th. Is the expectation still there based on what we know? What is Fed saying? What are members saying? What's Powell saying? What is Trump saying? Which he should technically intervene, but nevertheless, markets have moved on his expectations. So what does that mean? Let's go on basic markets expectations. This would suggest dollar continues to come in lower. And I would agree with that. And I would probably trade that for the time being until as we get towards December the 10th, I'm asking, is markets correct in their thought process, in my opinion? And that will tell me whether or not to hold or cut the trade short and exit. So what do? How do we understand where charts should go? So basically, we always wait for pullbacks, right? So if we're selling the dollar, which does seem a little bit logical right now, we don't want to be selling at the lows, right? We always want to wait for a pullback. So what do? Start on the daily time frame and we work our way down. So let's see. Daily time frame, nothing there. Basically, because I'm looking to sell the dollar, I'm only looking for supply zones. I don't want to buy the dollar, right? Nothing's telling me as of right now to buy the dollar. So what do? Only demand zones in euro dollar, in AUD USD, in possibly GU, and only supply zones in USD XXX, dollar CAD sells, not dollar yen, until I see something from the BOJ or the government. So I'll leave the yen alone for the time being. But there's lots of opportunity elsewhere. So what do? Let's say we only look at euro dollar. We're only now looking for demand zones, right? So let me delete this and we'll start from the beginning. Or start on the daily and work our way down. So what do we see? We see a demand zone on the 12-hour right here. So we mark that out. We then drop to the 8, 6, and 4. And there's not much there. This is technically a demand zone, but we need to create the higher here. We need it to close above the higher here to be the higher, and that then becomes the valid demand zone. But let's say it doesn't do that. Therefore, that's the region I would be watching for a long. If we trade above it, perfect. There's a demand zone right there in the 4-hour. But let's say there isn't. Then what do? I'll then wait for the pullback. So let me delete this. And you can see how simple my technicals are, right? I've seen a lot of people do a lot of complicated technicals, and it's really not necessary. What you'll notice is, especially when you're starting off, because I noticed this is a theme for a lot of people, is they start off very complicated because they feel like that's what they need. And then you tame it off as you become more experienced, and you actually realize that, this is not really needed. This one works better for me. I'm not going to use all these fancy concepts. I want to keep markets very, very simple. That's why a lot of traders that I know have a very simple charts. You know, they mark out a couple of regions, they wait for price action to present itself, and they don't rush to get in. That's a common denominator for a lot of good traders out there that are consistently hitting payouts or have a live account. They're always being patient, and they always keep price action very simple. So you can see how very simple my price action is. I don't overcomplicate it, because remember, my reasoning isn't coming from a technical perspective. The technicals only gives me a rough area where I want to get in. It doesn't tell me the direction. It just tells me an area where I would want to get in. The direction comes from fundamentals. And that's what we do. So I'll wait for the pullback. Let's say it pulls back now. Obviously, that's not a demand zone because we haven't created the high. We wait for the pullback. And as we get into this region, and I'll ask myself, are there any whole numbers around this region? For example, 1500 we were rejected from. Around there. And then I'll look to my left a little bit as well and ask myself, have I seen rejections away from there previously? Yes or no? And then that reaffirms the area a bit. So what do we do now? I'll wait for the pullback into there. Then I wait for a break of structure. So that occurs mostly in the 1 hour. So let's say we go on the 1 hour, and then I'll wait for a little bit of break structure. The reason for that is because sometimes you can be early to a direction. And what it can happen many, many times, and I've seen this a lot, where we've seen price action go lower through your demand zone, hits a demand zone slightly lower, and then it rallies very, very aggressively. I'm sure we've all seen this price action before. So what I do is wait for a break of structure, because what that does is it confirms to me that statistically, when there's been a break of structure, it should continue to occur. So that's why I wait for a break of structure. So let's say the lower high is created there. So basic price action. We wait for a break of structure here. We wait for it to close above the high or above the wick. And then I wait for a pullback into a demand zone, let's say there. Stop will be below the higher time frame demand zone here. And then my target will be on the daily time frame, where I look to my left. And then I'll ask myself something around, where's that little arrow tool? Am I blind? Where is it? There. For some reason I can see it. we trade it here, for example, if we come in a little bit of drawdown, not that deep. And then target wise, you look to your left. So go on the higher time frame and think, okay, if we get to 16,500, I'll start to take out. If we get towards 17,200 to 1,700, I'll take out. But what I would do personally is, as we get to a higher time frame level, I'll take out a bit of partials, just to secure that if we do eventually come lower, I'm not out of the, like I've not lost the trade. But what I'll do is I'll assess the reason the rally moved in the first place, and is that expected to continue? And that's the question mark that I'm asking, basically. Is it expected to continue? If it's a yes, based on the data, then I continue to hold the trades. And that's basically how you trade higher time frame. It does not have to be complicated. You don't have to use all of these fancy terms that people use nowadays. I've been there, I've done that, I've done all of that. I just simplified by just understanding that it's not really necessary to use all of these crazy concepts that comes out nowadays. So keep it very, very simple, basically. Supply and demand, nothing more, nothing less. That's just my personal opinion. Everyone's obviously different. But for me, I've seen the most success doing very simple price action. So that's what I'm waiting for euro dollar. A bit of a pullback towards around that demand zone or on the 12-hour, which is there. And then I'll look for a long. Target one can be there. However, if we close above here on that high, you can see that there is a 4-hour demand zone right there. Those are two areas. Now, another one that I would be looking at on a weaker dollar story is AU. Now, and you do exactly the same thought process. Start on the high time frame, get a direction from fundamentals, so it tells me I want to go long. Cool. My thought process is now only demand zones. So what do? Start on the daily time frame, do exactly the same thought process. Go from that daily to the 12, to the 8, to the 6. Basically just finding where areas of demand are. And you can see right here, that's an area of demand is right there. On the 4 hours, that anything possibly there actually. I'll mark it out. Lower time frame demand zone doesn't seem to hold too well because there's less data. High time frame demand zones does do pretty well generally because there's more data in it. High time frame, the stronger the demand zone or supply zone. So exactly the same thought process. Have we broken structure as well? Yes, we have. There, perfect. So that's a confirmed break of structure from a technical perspective. Fundamentals is also starting to align. Now I just apply the same thought process. Wait for the pullback. If we don't get a reaction around that 1 hour demand zone there, then I'll leave it alone if I don't see no break of structures. If we come a little bit lower to this demand zone right here, and then I do see a break of structure, then I want to get in. Stops below the high time frame low. There. Target. Daily time frame. Look to your left. Where is the wick? Basically around 65. Let's just round it to 65,750. Right there. There we go. That's it. No, nothing complicated. Nothing tricky. Just keep it very simple. How do you factor interest rates coming in the next meeting? So right now, the Fed is not expected to hold. They're expected to cut. So what does that generally tell me? Well, markets expect a lot of pessimism in the data in the future. Remember, markets trade the future, and they can see that the data in the future is not expected to do well. If they were expecting to do very well, they wouldn't expect a rate cut. Does that make sense? So they expect to be pretty poor. I'd agree with it because there's been a little bit of the data within NFP that was not exactly great. So therefore, we know the Fed in the future should cut. Whether or not they cut in December, it doesn't really matter for me, because the reason for that is if they don't cut in December, they will point to January being a rate cut. And what would happen was you'll see initially a stronger dollar because markets expected it initially, and then you'll see weaker dollar as the dot plot for 2026 would suggest more rate cuts, and dot plot does come out on the 10th of December. So you'll see initially a stronger dollar, and then you'll see that big wick being created on the meeting when Powell is talking, and that's because he's suggesting more rate cuts in the future. It's not because of market manipulation, it's because of algo-driven rally. And when we say algo, we're talking about quants. Then they cut it at the Fed meeting. Then the Fed talks. What they're saying will drive where the dollar price action goes, because markets are trading the expectation of the future. So that's what I'd be expecting. Whether or not they cut in December doesn't matter. I'd still remain slightly bearish to the dollar for the time being. Then they send something in December on the 10th. I assess it. Then I trade it after. I'll wait for a pullback. Do you look out for inducements? No. Because they're obvious in market price action. I don't really, to be honest, I don't really look at all of that. Just never have. So I don't need to change my strategy if it works for me already. Does it work for other people? Sure. It just doesn't work for me. So it depends on where price action goes to the demand zone. But if price action goes there after a week, doesn't really matter. If it goes there after a week, that's fine. If it takes a month to get there, it does not really matter. As long as the reason still points to upside. That's the most important one. If it gets to there in a month, but you'd notice that anyway. You're not going to stick to a bias for a whole month when you're seeing that data is changing to the downside. That's why every week you're basically watching the data to see, does it still suggest a rate hike or rate cut? Does it still suggest optimism, pessimism? If you're seeing things switch around, there's no point in holding that bias. Don't get married to a position, basically. That's what I'm trying to say. Number 2, then after the price I've reached my order block, will I switch to the 50-minute time frame? It's completely up to you. I've always done about an hourly, just because you can gauge what the 15-minute is doing by looking at the hourly anyway. So for me, it's always around the hourly time frame. What I would do, similar, exactly the same thought process. We get a breaker structure, close above the higher. That's important. Then wait for a pullback into a demand zone, stops below the high time frame low, and then I'll look to target the high, because I'm not trying to capture some crazy RR. And we know, a lot of us knows that this is not, like a lot of us here, right? Just trying to think how I can word this. A lot of us here knows how unrealistic it is to always capture these super high risk to reward trades. It's not sustainable. If you feel like it is sustainable, then there will be a lesson that will be learned in the markets, trust me. So what we try to do is you only try to capture a couple of % at a time. You're not just going to get in one trade and hold it forever. You're going to get in multiple trades on the pullbacks, right? When you see a high time frame pullback, if the reason is still there, high time frame demand zone, wait for a breaker structure, get into the trade, maybe take it out a little bit earlier so you can still capture a decent risk to reward. Still holding that long-term swing that you initially had, because what that does is it teaches you patience, which is massive in the markets, as you know. And then you still do the same thing, right? Always assessing, does it still make sense to get in or not? But that's just how I've always done it, obviously. Many times I got lost. I was a bit confused on institutional buying and selling zones, how to capture their footprints. This is an interesting concept, and we'll start the giveaway in just a moment. To join the giveaway, as I'm sure you are all aware at the moment, by now at this point, type this in the chat, and then it will put you into the giveaway, and then I'll open it up. So type that in the chat, and then it will chuck you into the giveaway. But why do people, right, think that banks are out to get them? I want to see, why is this a thing? Like, why do people say that? Can anybody let me know in the chat why people believe that is the case? Because I always battle that idea, because these banks are not really caring about what us little people are doing, right? FX markets is about 5% of the entire market liquidity. Why are they caring about our tiny little positions? They've got bigger fish out there to sort of potentially fry, if you will. But I don't get where all this concept came from. And I've always battled that idea where they don't care about us because we're so small that we're basically nothing. What do they gain from it? A lot of traders nowadays trade prop firms, so it's not technically entering the real market. And a lot of traders out there are B-booked anyway. So you're trading against the broker's liquidity. To me, that doesn't really make any sense. That's why I've always battled that idea. So, that's just my opinion. Everyone can have their own opinion. That's absolutely fine. But that's, to me, logically what makes sense. So, AU is another trade I'm looking at. And we'll do another sort of an idea, or not an idea. We'll look at some other trade ideas as well. I'm just trying to think which ones. Trying to think which has opportunity in the future. I'm not so much interested in like short-term opportunity, trying to trade like the New Zealand Central Bank, for example. I'm trying to think like, what's a trade where we can, you know, hold for a decent amount of time and not worry about it too much. So AU is a good one. Eurodollar also. AUD CAD. That's actually also another good. I believe we spoke about this before. So AUD CAD. RBA is relatively okay in terms of hawkishness. The BOC is not. In addition, we are starting to see the dollar come lower. So what happens on the Canadian dollar is we actually see the CAD weaken on the crosses. So like AD CAD comes lower, or when the dollar weakens, sorry, you see AD CAD go up, you see Euro CAD go up, you see NZD CAD go up, because the trade relationship between Canada and the US is so close that when the US sees pessimism, like we're starting to see now, the CAD also sees that. But fundamentally, anyway, in Canada is not great. So therefore, I would like to be in a long on AUD CAD on the higher time frame. So what do? I go on the daily and then do the exact same price action. Start on the daily, go to the 12, go to the 8, go to the 6. You can see there's a 6-hour demand zone right there. Does it line up with a whole number? 91 whole, which is right there. Right there. Has it rejected from there a few times? It has. Perfect. That seems like a decent level. So if we pull back there, go down to the hourly. That actually looks like a nice price action, to be fair. If we pull back there, do we break structure? If we do, perfect. Into a demand zone, stops below the high time frame low. Go to the daily time frame, look to your left, and target the highs. That's all you're doing, because remember, the fundamentals gives you direction. It's just technicals that you have to use to find an entry. Technically, right, you could buy at any point in the market. In terms of, if I wanted to buy AED CAD right now, number one, it's obviously terrible risk to reward. But if I have a perspective of the future in terms of what we know right now, I know in price action, a month, 2 months from now should be higher. So I should technically be in profit. But what we're using is price action to have an idea of roughly where it should trade from. And then we use that as a rough sort of gauge for risk to reward. So if my stop's here, I'm roughly risking, let's say 1% or 0.5%, and I'm going to gain about 2% on that move. Great trade there. So let me see if there's any other questions, and we'll start the giveaway in just a moment. Let me scroll up. How do you identify demand zones? Pretty much how I did it. I do add into trades, yes. Current situation for the RBNZ in a nutshell. I'll show you some examples of that. Let me scroll down. Because some guys said on YouTube, Instagram. Again, I don't really understand where all this concepts came from. I'm not really in tune into like the whole Twitter trading space, to be honest with you. I believe it came from Twitter. I don't think that's the word. Yeah, that's true. But again, these big guys, right? They don't we're 5% of the whole entire market liquidity. It costs a lot to move a liquid pair like Eurodollar, right? It's almost going to dry up a lot of liquidity for Eurodollar that retail traders are trading just on one pip alone. So that's why I don't really understand where it all came from, to be honest with you. Does manipulation happen to a certain degree? Yes, but not to the extent that people have seen in the past. That's just my opinion. I had back in the day, old days, with Jack Davis from Forex Source, a fundamental trade of Euro GBP, went 300 pips drawdown, and then it went directional fundamental. It took me 3 weeks. Yeah, I mean, with trading fundamentals, you have an idea of direction. All you're trying to figure out is just the timing. That's it. The timing will come from stuff like events, price action to a certain degree. Price action will break structure when timing's occurred. And I try and find out why it broke structure. What was the reason it broke structure? So that's all the entries. Let me just see if I can get up the thing. So spin the wheel, isn't it? Spin the wheel names. Dun, dun, dun. So, let me delete all these old entries, and then we'll start this new thing here. Let me copy all of those names that entered the giveaway. Copy and enter. So that's all the names that entered. So let's see. We have 3 accounts today, which is Apex, Funded Next, and Alpha Capital. So right now we are going to do an Apex account. Now the way it works is, for those who have never been in a live before, what it basically happens is the name comes up on the screen when I click to spin. When you come out, you have to put yourself in the disc in saying here and say, oh, I'm here. Just put in the chat. And then what you do is within 24 hours, open up a ticket on the Discord, and we'll do our best to get back to you. So here are all of the names, and we'll have a little look at what we see. So here it is. Let's have a little look. So this guy, Philip ZJ3LE, if you drop it into the chat and just say I'm here, we'll again open up your ticket in Discord after, and then we'll see. If you're not here, I'll give you about 30 seconds. I'll remove you, of course, and we'll spin again. But let's see. Doesn't seem like... Oh yeah, you are here. Perfect. So yeah, now that you're here, perfect. We'll remove you. So that's for an Apex account. Obviously, now what you have to do is open up a ticket into the Discord, and then we'll get back to you on what you can do next. So well done. Let's move on to the next one. So this is for a Funded Next account. Let's have a little look. So, Devik Gaskoda, if you are here, please drop it into the chat. And then, as you know, open up a ticket in Discord, and then you can claim the Funded Next account. Then after this one, it is a Alpha Capital. So let's see if you're here. Devik Gaskoda. Longest trade I've ever held was over a year, actually. That was EuroCAD, and then GU we sold at 138 post in 2022. Should be on my Insta somewhere. We sold it here, 2021 it was, sorry, and then we held it through 2022. And then this big old sell-off was the Liz Truss Kwarteng issue. I'm sure some of us may remember that. And then I exited after that big old sell-off happened. So I exited, I can't remember, it would be on my Insta somewhere. But we entered here on this pullback here. So what we saw was a break of structure here on the higher time frame. Fundamentals was turning. It then pulled back into 2 areas of supply. So we got stung on the first one, which was right here, which was this supply zone right there. You can see how we tapped into that supply zone initially, which was here, and then we got stung, which is, it is what it is. And then we still had the bias, obviously, because nothing's changed. That tells us. And then we looked at the next supply zone, which was there. And then you can see how price action has presented itself since then, which was a lot of pessimism in the UK and a lot of optimism in the US. So is this person here? Let me double check. He is. Perfect. So well done. And let's move on to the next one. So this one is for a Apex Capital accounts. Let's see. So, what ones am I using for funded? I'm using a couple. I'm just testing to see which ones work. I'll tell you in a moment. So Silent Minds I2s, if you're here, just drop say I'm here and then open a ticket. If not, we'll remove you obviously and we'll move on to the next person. So let's see. This is the last point of the giveaway, of course. So let's see. But yeah, the prop firms I'm using, there's different ones out there. So I was using QT. I am using another sort of niche prop firm right now. I'm not going to say which one until I have a good idea that they're fairly legit. And once they are, and I've kind of tested it, then I'll let you know, of course. And then I have heard FTMO is pretty decent, so I'll get some of them soon. And then I'm just going to test a bunch of different ones, and then I'll just put out a little opinion onto who, in my opinion, is okay. But I'm not going to tell you which one it is as of right now, because ones if they're not legit, and then I've recommended it. So I've used QT. They seem okay. And then I'm using a couple of others. I'm just testing to see which one's pretty decent. But I know FTMO is pretty good because I know a few traders who are swing that use FTMO. So I can recommend them. Do I use COT data? Yes, to a certain degree. Obviously, it has been delayed a little bit because of the lockdown. But you would use COT data. So where is it? On here. This one. So, for example, you would use it like as such. Number one, get a rough position. Or obviously, my laptop is in, or my PC, sorry, is in dark mode. So that's why it looks a bit weird. But you'll get a rough positioning. Are people more long or more short to the dollar? And you can see from non-commercial, which are more like banks and hedge funds, they are a lot quite short the dollar. And when we've been at this point in time previously, we have seen moves away. Basically, people thought actually positioning is quite stretched. And therefore, we do actually see opposite price action, even though COT data suggest otherwise. But I would use it just rough positioning. It doesn't gauge and tell me what trades to take. But it will tell me, is markets a little bit overly short of currency, overly long? And that will tell me roughly, is it the right time to get in or not? It's not a given, obviously, but that's generally what I need. Why is your name not in the wheel? It would be at the time of when I was sent it. So if you scroll up, there'll be a message say, all the giveaways are in. I got sent, and then that's all of it. I don't know what FTMO is expensive. It's kind of like Bloomberg, actually. Bloomberg's expensive because it's the gold standard, right? A Bloomberg terminal is it's the best of the best, right? FTMO, I guess it's kind of the same. It's the best of the best. So they have that, they know they can charge it because they're that good, basically. So that's, from my understanding as to why FTMO is the best. I've never really heard anything bad about FTMO, to be honest with you. But there are other good prop firms out there. Apex is obviously one of them. Alpha Capital are also pretty decent. I'll definitely be testing some of their swing accounts if they have them available, and then I'll of course let you know. What day of the week do you live? I will do. I'm always on Wednesdays around 5 p.m. GMT. The website is called. I'll show you. I'll type it onto TradingView because obviously my bar at the top is hidden. This is the website I'm using. tradingstir.com/cot. It's a very good website. It's very visual, which is always good to see. I don't like reading through numbers 24/7, so a visual representation is also pretty good. So that's the website I use for COT data. It's free. We all like free stuff. And COT itself has leverage funds, hedge funds, asset managers, other reportables, non-reportable dealers. And that could also give you a good guidance on is volatile positioning like hedge funds, a bit more long, short. Overall win rate, that's a good question. It's kind of like 50-50 actually, as of right now. Sometimes it does pretty well, sometimes it doesn't. Like 2022 is like a very high, decent hit rate because it was so easy to trade that environment. Nowadays, we're in a slightly more volatile, choppy environment. Win rate does come down a bit, but what's important is risk management is the most important. No over leveraging. That's the most important thing. Sounds cringy, cliche, but it's true. Is it worth to swing trade on prop firms? That's a good question. That's what I'm testing, so I'm not too sure. I can't give you an answer right now. But if people can give the answer, then drop it into the chat. But unfortunately, I can't give you the answer now because I haven't tested it. I don't want to give information without myself testing it. That's the thing. So once I do, then I'll of course let you know. I cannot watch Tyler because I'm not up for Asian. Yeah, time frames. It's recorded, so you're more than welcome to watch the recording. Win rate is a bit overrated with good setups. With 45%, you're in profit, but not really overrated though when you have good POI. True. Yeah. At the end of the day, right? What you're doing is, or what people are trying to do is just make money, right? So as long as you're taking money out of the market, that's all that really matters. Let's be honest. Whether or not you have some crazy RR, very, very low risk win rate, because you obviously can't have two hand in hand. You either have a good risk to reward, but a very low win rate. So you're trying to get those good entries, but you do take a decent amount of stings, or you have a slightly lower risk to reward, but your win rate is much higher because you're a bit more patient and you're a bit more selective with what charts you take. Either way is correct. I'm more inclined towards a bit of both, hence why it's more like 50-50, where I'm not aiming for some crazy risk reward. I'm selective roughly with what trades I take, so that's why it kind of averages out to 50-50. What risk swing trades do you take? What risk, sorry. So there's actually a very good one of, look, I want to see if I can find the doc, because I always try and find examples. Those who have been taught by me before knows I always like to try and find examples. It's all good like drawing out on the chart and so on and so forth, but without showing examples, you can't really back it up. So there's a good doc. I want to see if I can find it. If not, I will put it into the Discord. But I want to see. It's by Nomura, which is a Japanese bank. This is an older doc. They haven't released. I don't think it's this one. No, that's their positioning. Might be this one. And what Nomura does quite nicely, actually. I think this is a bit of an older doc as well. Sometimes what they do is show their trade ideas after, obviously, they've taken the trade. Ah, here it is. So this is one of their short GU trades that they entered on the 11th of September. Let me make this full screen. So one of their trade ideas that they took, and what they have, or what Nomura does very, very well, right? And I kind of also, you know, nicked a little bit of of knowledge from it, is they have a conviction rating. So basically, the way Nomura does it is, I don't know if they will show the other trades here. They do here, perfect. This is some of their old trade ideas, right? Whether or not they're in profit, it doesn't really matter. But the conviction rating is important. So if they are 5 out of 5 position, or like 5 out of 5 conviction, like right here, they're 3 out of 5. What they'll do is, if they're 5 out of 5 convicted, what they'll do is they'll put on the maximum risk allocated for that trade. I.e., if they want to risk 1% or 2% for that trade, and they're very confident, 5 out of 5 conviction, they will enter the whole 2%. Whereas, if you are, let's say here, 3 out of 5, that's 1/3 of their position. So 1/3 of 2% is whatever. Not the greatest of maths. Can't do it off the top of my head. But they'll put 1/3 of what they wanted the risk into that trade, because they're they're okay with confidence, but they're not too sure just yet. So therefore, they're 3 out of 5. If they're 2 out of 5, I believe they're watching closely. And if it's 1 out of 5, I believe it's on their watch list, but I believe it's nowhere near an entry just yet. So that's what I would do, is I'll have a rating between 1.5% to 0.5%. And what I'll do is, depends on how confident I am, will depend on how much risk I enter. So if I'm, you know, pretty okay with the risk, I'll enter, let's say 1%. But if I'm like, okay, it doesn't, you know, it makes sense a little bit, but it's a little bit choppy of price action, I might enter, let's say 0.5%. So there, if you're in the trade, cool, and you're in profit. and then your conviction rating goes up. So that's when on the pullback, you, let's say, exit as some of your trades, so you have some margin, and you're obviously not over leveraging that margin, and then you can enter other trades as well. So that's what I do. That's what I do. Again, everyone's slightly different. Some people stick to only 1%, stick to only 0.5%. That's fine. For me, I kind of took it from Nomura, where it's a conviction rating. Partial positionings, that's a good question. So, with partials, it's kind of actually the similar scenario where if I am up, let's say, I don't know, 1%, or let's say 2%. Let's say it got to the high, I'm at 2%. What I ask myself at the time is, does it make sense to hold the trade? If I'm seeing a little bit of skittish behavior on the data, or the Fed is saying something that kind of throws a little bit of cold water over, let's say, the long I took, then I'll exit a decent amount of positioning, like say 50% or 75%. Whereas if I am in the trade and it makes a lot of sense, but I don't want to be too lopsided with positioning, I'll exit, let's say 25% of the pair and leave the 75% remaining to the high. Does that make sense? So that's how I would do partials. Everyone's slightly different, but that's how I do it. Prop firm might have news restrictions. That is correct. Holding your trades for weeks, then you enter later. Possibly. I mean, I haven't had any issues so far, but that's because I haven't held a trade for a long time. So I could be bitten by that news thing, but as of right now, I haven't, because obviously I've not been through that period just yet. That's why I need to test it before giving out that my personal preference is X, Y, and Z. So once I actually do test it properly, I'll let you all know. Do you file of every trade where you write fundamental analysis? I used to. Obviously, you can use good websites and apps now, stuff like TradeZella, where it kind of does it for you. But I used to do that a lot. And I'll mentally note roughly what happens. I always try and go back and look at history as to why did I exit that trade, or why did I take a loss. And what I do look for, I don't look for the technical reason, I look for the fundamental reason. So I'll ask myself, what news occurred around this demand zone that I was looking to enter? Could I have done something different? If it's not, and you have to be honest with yourself and be like, I probably wouldn't have looked at it, you just take the loss on the chin and you move on to the next one. Do you like pyramid? I'm not sure what you mean by that. Alpha has a swing account. Yes, I will be testing them out soon. Even though you're not intraday, that would recommend trading futures. Possibly. I know some people who trade futures could probably have a better idea. I've never traded futures before, although I know it's pretty good. So I might test it eventually. It's always, to be honest with you, for those who know me, it's more of like, can I be bothered to do it right now? But I do get onto it eventually. So RBNZ, let's have a little look. So there's a good website called ING. And if we scroll down, if I remember correctly, they did talk about the RBNZ, which was it on this one? This one. So with the RBNZ, let's just zoom in a little bit. It's a good website. It's free. It's called think.ing.com. But let's have a little look as to what their reasonings were. So they said hawkish cut supported the currency. The RBNZ matched our expectations of a hawkish cut, prompting a rally in the New Zealand dollar. Perfect. Hawkish cut can exist, where they cut rates, but they tell you basically that the future is unlikely for a cut, and that's why the New Zealand dollar strengthened. I did talk about this on one of my lives as well. The 25 base point reduction was accompanied by an update rate projections that showed no more rate cuts, and one member voted for a hold. Basically, they're at the end of their cutting cycle. Can they recut again? Yes, only if the data is bad. The data is not as bad now. New Zealand dollar may begin to recover. So how do you trade it? Because it's all good known theory. How do you trade it? That's important. So we'll get onto that, but let's finish off the last two paragraphs. The forward guidance has a central scenario, which is unchanged for the whole of 2026, although unsurprisingly, the committee is retaining some dovish conditionality. If the OCR was to change over the next 3 to 6 months, it might be more likely to go down than up. Cool. That's a bit of dovish language that, they can cut if they need to. The OAS curve has priced out additional easing, And the notion is that the RBNZ has maxed out its easing potential should the currency recover. Also in line with our bearish dollar view, we continue to target a move to 0.57, which is, where is it, 0.57? Oh, we're basically at 0.57 now. So we now have to ask ourselves is, does it make sense for the New Zealand dollar to strengthen as of right now? Well, as a trader, remember, you are trading the future. So you have to ask yourself is, do you see the data in New Zealand expecting to be better in the future? Maybe. We'll have to see how it plays sort of at the next prints. But what you ask yourself is what they said versus what happens in actual markets or what actually happens with data. So they were a little bit more hawkish, but they allowed to understand that if they need to cut, they can. Cool. Now we ask ourselves is what data will come out that would basically allow us to understand that what they did was correct. So if we look at the calendar, what you can do is you can trade New Zealand dollar strength in the short term. And the reason I say short term is because right now it's a bit clouded because we haven't had any more data since the RBNZ meeting. Once more data comes out, we can understand, can we swing New Zealand dollar now or not? That's what I'm interested in, is the swing. So what you could do, trade New Zealand dollar, a little bit of NZD strength in the short term, especially against struggling currencies like the Canadian dollar and the US dollar. And then when data comes out, you ask yourself, does this match what the central bank said? If it is, then you understand that some of the trades that you're in can turn into swing trades. I'm just looking and see if there's any data here that we can look through. Unfortunately not. Is there any speeches? There's one on the 1st of December, which is next week. Cool. So we'll see what Bremen says. If he says something that's actually quite supportive, New Zealand dollar can remain a bit more supportive. But I'm not going to say it's going to outright strengthen because we haven't got any more data to suggest that what the central bank has done is correct. Because data before this was not great. So it's a little bit, of a risky one. So I would maybe trade it stronger in the short term, but then exit maybe at very near-term highs. That's essentially how I would do it. The link to the Mura one is on their portal. So unfortunately, you may not be able to get it. We're in a discount, so it makes sense when using correct. Yes, it's been sold a lot. So any positive news would have a much larger impact for upside than downside. That's positioning COP data. But apart from that, are there any other questions for myself today? We've gone through a decent amount and we've got a pretty good baseline for what we need to do next. Are there any questions for me today before I let you go about your day? I obviously appreciate you for being here, and I'll see you this time again, 5 p.m. UK time next week. But I don't think there's any other questions. So apart from that, everybody, that is myself. I obviously appreciate you for being here. And as you all know, if you have any questions, you're more than welcome to ask. Just at me in the Discord or send me a private DM. My DM should be open on Discord. But apart from that, everybody, have a good rest of your week. And I will see you next week, everybody. Take care.